Hey everyone, John here, slingshotfutures.com, and welcome to the Market Mindset, where we dig into the psychology behind the moves today so we can better understand tomorrow. And today, we're going to be digging into the S&P 500. Now, the S&P 500, first of all, looking at the Friday session, coming into a new week is always interesting how they want to play things. When we look at Friday, we can see that really there wasn't a whole lot going on. Mainly just a huge range, possibly a wedge forming inside here as well, with more so the bulls in control than the bears. The sellers were having a little bit of a hard time defending those highs, but the buyers were defending the lows very nicely. Now, coming in today, we find that we gap even further up, and we actually push into an unfilled gap back from Thursday. So the fact that we filled that gap on the very first candle, and that first candle ended as a very kind of distraught bull-bear fight, right? Lots of wick on the top, lots of wick on the bottom. They're not really proving anything here, other than, we may just run into a range to start the day off. Now, as we look at further movement, we find that the bears take over, very aggressive bear candle, only to fill the gap and stop dead in their tracks. So we're still seeing more and more emphasis on this potentially being a range, and really just kind of keeping an eye on that, thinking, well, Friday we ended as a range, we opened gap up, immediately failed by closing a prior gap from Thursday, and now we're seeing a lot of back and forth, down, up, down, up, down, up, lots of wick on both sides of the candle. We're not really getting much proof. So if the sellers do show up, there may just be buying pressure under the low, thinking that the breakout, any attempt at the breakout, is going to completely fail. And that's exactly what happened. The bears show up, but they showed up all in one huge candle, and it ends up just being a sign of exhaustion. The sellers, they spent all of their ammunition already. They don't have anything left to carry the trade on, and that allows for the move to fail, right? That allows for buyers to jump in and say, you know what? I don't believe you, sellers. You're very likely going to not get the breakout that you're looking for, and you're probably going to be trapped more than anything else. So that allows for a buy to swoop the market back up towards the highs. And what do we get? By the time we start cycling back up towards the highs, now we have a very clear picture. We just pushed off the lows, failed off the lows, now we're coming back to the highs, and even if you look at the intermediary swings, notice all of that wick, even the smaller swings are failing. So if we get back up to the overall high, you are very likely going to find a massive amount of sellers to be at the highs, thinking, you know what? The breakout to the downside failed twice, if anything. The breakout to the upside, probably not going to do very well either. So a huge amount of sellers pile in and drive the market right back down to the lows, to where we find a double bottom. Now, the double bottom, this was one where, if you were able to be lucky enough to get filled down there, you were able to pick up a nice little bounce there. But when we start seeing the sellers pin the move to the bottom, the buyers are no longer showing up. We know that we want to be buyers below the range, but it looks like we may have to start thinking, well, they may get at least a short-term breakout. Right? So maybe they're looking for a level of support. We have two levels right here, and that gives us an area of interest right there, and we start breaking down. So if you were able to catch that nice little bounce, you made out like a bandit. I know I wasn't able to, and I know a lot of other people weren't getting filled there either. But when it started breaking down and you have just over-exhaustion, we have too much happening in one direction. This bearish move is completely out of the ordinary, and now they're breaching a prior area of support to the downside. Something isn't quite right here, right? So we're seeing that the sellers are running out of steam. They spent all of the ammo that they had, and there's just no more to keep the move going. So it allows for another buy move to go back up, and just assume that there's going to be a correction. Maybe just back to the prior swing, maybe all the way back up to the highs. That remains to be seen yet. But we're looking for the buyers to come in and scale in underneath the low, assuming that the breakout will fail at some point. And that's exactly what happened. A nice little bounce right back up. And now we find ourselves smack in the middle once again. So when it comes to range days, the important thing is try to stay out of the middle, right? The middle is a very dangerous place to be trading. You're looking to sell the highs, you're looking to buy the lows, and you're looking to stay the heck out of the middle, because that's where all of the bloodshed comes into play. So beautiful range day of trading here on the S&P. If you have any questions about it, you can always send me an email, jbrink@slingshotfutures.com. Until tomorrow, have a good one.